This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Vic Pascucci of Lightbank. Vic, thank you for joining us.
Thanks for having me, Hal. Really appreciate it.
Great. So how did you get into early stage funding?
I like to tell people how I got into venture was by fighting, clawing, scratching, kneeing, kicking, and elbowing my way in. I started my career as a lawyer in kind of the mid-90s time. And what I noticed is, as a trial lawyer, I seemed to be going to court every day and just destroying things that were in my path. Whereas all these brilliant people I would meet, entrepreneurs and investors, seemed like they were building things every day. And to me, that seemed like a much better way to spend my life and spend my career. So as a lawyer, the best way to get into venture and entrepreneurship was just to start my own law firm that represented investors and entrepreneurs. So I did that. I started then, I was invited to be on the State of Illinois Investment Committee for the early stage seed funding. And from there, got into startups and was raising capital and was part of a bunch of management teams and eventually got into the corporate world. And then I guess woke up one day and realized I was managing a $330 million fund for a financial services company down in Texas, doing all venture across financial services, enterprise technologies, and consumer models, and was able to meet my partners here at Lightbank throughout the course of that.
So tell us more about Lightbank. How exactly do you guys work? What do you look for to invest in, et cetera?
So, Lightbank is an early stage fund. We're seed and Series A. We're headquartered here in Chicago, Illinois, and we're founded in 2010. We're probably best known for the entrepreneurial DNA of my partners, Brad Keywell and Eric Lefkowski, who have founded 6 companies and generated over $12 billion in value. We, like I said, we tend to be the largest checks in the rounds at the seed and Series A. We are, because of our entrepreneurial DNA, we're entrepreneurial driven, not necessarily sector focused, but we do have concentrations across fintech, enterprise, vertical enterprise software, as well as consumer and digital. We source proprietary deal flow from the network of 10,000 Lightbank operators that have worked for a Lightbank-related company, 250 deals that have been completed by this partnership, and then our deep personal networks across the various industries we've worked with. And we do incubate companies as well.
So you go across sectors and so forth, but which of the sectors out there, in the fintech world, AI, blockchain, whatever, which of the sectors are you most excited about?
We like to say at the firm that we're an entrepreneurial-driven firm and fund, but I remind everyone in the partner meetings that, well, you do understand that the best partners are, or the best entrepreneurs are in fintech, to which they usually throw things at me. But I'm really excited at this next generation of fintech and financial services, and that's broadly speaking covering banking, insurance, investment management, securities, and then the underlying technologies, AI, machine learning, blockchain. I think what we're seeing is the maturing of the ecosystem so that entrepreneurs are realizing the power of true product innovation as opposed to distribution plays or slapping a new UI on a 60-year-old homeowner's policy and calling it innovation. We're seeing entrepreneurs that know the industry, they know the business. If they're not from it, then they team up with the right advisors, the right investors to get the guidance they need. And it's just a great maturing of what I've seen over the last, I would say, 20 years of doing this.
Well, it seemed like fintech is in that tipping point where change is really starting to come in a big way, in every way, given the maturity of the technologies, the pressures to move forward. And so where do you think we're going to see the biggest changes in the industry in the next year or two?
I think we're going to see the industry change in 2 big ways. And I think it comes from the perspective now that the matured ecosystem has. People now realize if you're going to be a true disruptor in financial services, a true innovator that's doing something that's going to disintermediate the large institutions, that is a long and difficult haul with meaningful capital requirements. And so the people going into that, the entrepreneurs going into it, the men and women that I'm seeing today, they have the grit, they have the determination, they understand the challenges in front of them. And then on the other side, we're seeing entrepreneurs go at things from that key enabler perspective. So how do you partner with large financial institutions to bring innovation, either as a distribution partner or a product development partner? Those are the broader things that I'm seeing change. And then just the inherent focus and continual focus on the consumer.
In fintech, you have to deal with regulatory, and often hear complaints from entrepreneurs they can't implement their vision because of regulatory, but that just comes with the territory. Do you see that changing in the near future to enable more of these new technologies?
I think when it comes to regulatory compliance, like when it comes to fintech, you can't skirt it. You can't say, oh, I'll do an MVP in financial services, because you can't kind of be compliant. You have to know the groundwork, you have to know the rules, and you have to speak with the regulators. So I think the smart entrepreneurs are sitting down with regulators to realize where is there room for interpretation and how to best enable their innovation. I think the bigger challenge is now coming with the blockchain technologies and the cryptocurrencies, is that the laws that are currently in place never, ever intended for such things to be in existence. So to take, laws that were written in the 1940s and try to apply them to the level of innovation today it's not good for the consumer, it's not good for businesses, it's not good for the markets, because it hampers that innovation. So, we're starting to see more of the regulators figuring out what is cryptocurrency, what are blockchain technologies, how can they be implemented to best help the financial services sector. So I think we'll see more change. I hope to see more policy-driven change as opposed to rules-driven to enable the innovation and not hamper the development of entrepreneurs and startups everywhere.
Well, you mentioned blockchain, and that appears to be a real game changer. Still in the very early phases, doesn't have all the performance I think banks want to see at this point, but where do you think the big win for blockchain is going to be in the fintech world?
Yeah, I think blockchain as an underlying technology is amazing. We are definitely in the early stages. I still believe we're in kind of what was the web-enabled internet in the mid-90s based on the development I'm seeing. And I think what entrepreneurs are now hopefully realizing, especially those that are bringing blockchain technologies and cryptocurrencies to financial services, is that you're just not bringing new technology into these enterprises. You're changing the fundamental fabric of how they operate. And in order to be successful there, it's going to take a special type of entrepreneur that has the credibility, has that type of presence, has those persuasive talents, and can communicate a vision to get people at the end of the day to risk their jobs in order to adopt these technologies. And when I spend a lot of time in blockchain and in the cryptocurrency space, and the really astute entrepreneurs understand that it's not just technology. This is not enterprise technology sales to financial services or enabling financial services or building a business. It's changing the operations. So it's big enough challenge as an entrepreneur to get financial services or get an enterprise to buy a new enterprise platform and to do rip and replace. This is actually changing the fundamentals of how they do their work, which is a whole nother level of complexity and challenge. And just like in other areas, we're seeing entrepreneurs with a good fundamental understanding going after these challenges.
You deal a lot with the big banks, and we're in your position. How do they view the blockchain? Are they resisting that, or are they working hard to implement it, or are they looking for the killer app? What's their take on it?
It's hard to paint them all with a broad brush, but it's kind of like mom and apple pie. Everyone loves it. And so if a large bank says, or you ask them, do you want innovation? They're like, oh, of course we want innovation. And look at my innovation lab, and look at my corporate venture, and look at my this, and look at my that. And I think what I'm seeing is a lot more what I'm calling innovation theater as opposed to innovation in production. Like, I'm not seeing the meaningful adoption. I'm seeing a lot of lip service. It's unfortunate that these entrepreneurs and these startups, and I spend a lot of time working with them, wrapped up in these programs or these accelerators and incubators that will never let their product see the light of day in production. It's just more of, oh, let's do a pilot, let's do a trial, let's be innovative. And what the banks have to understand is that these are individuals that are trying to build businesses and get to market. It's not about innovation for innovation's sake. So I think banks, large institutions are slow to adopt change of this level, but we just have to stay at it.
Well, the technical knock against blockchain at this stage is the lack of scalability. People are trying to replace the credit card transaction payment system and scale, volume, and speed with blockchain, which is it's kind of like using DOS to run a space shuttle. It just, it's really it just hasn't been developed far enough to really do that yet, but potential is there for it. What's your take on that?
I think just like Moore's Law and what we're seeing with the new developments with the sharding of the code of the blockchain in order that there are smaller blocks that are more efficient, that it is a matter of time before we get to those credit card level transactions. To the extent we need to do that level of transactions and payments, there's still enormous values of value to be changed, inefficiencies to be eviscerated when it comes to things like smart contracts and insurance, when it comes to things outside of payments. Like you don't need rooms and floors and floors and floors full of people to do policy administration or legacy mainframe systems, when you can enable a smart contract to handle those binary decisions on coverage, not coverage, on buy, sell, on those types of things. So I think that type of scale is there today, but when it comes to the payment side, that the systems are there, the technologists are working on it, and we'll see it in payments. It's just a matter of time.
So if a startup came to you saying they wanted to get into blockchain and go after the fintech world, what would you advise them to pursue, and what would you advise them not to pursue, given where we are today?
I'd spend a lot of time with them going into, do we have kind of founder product fit? Like, are you the right founder to do this? And explain what those challenges are and how I want to help them get over those challenges. Make sure that are they really in it, are they really understanding the level of scrutiny and the level of challenge? So that would be the first. And then I would start looking at kind of that product market potential fit, because we are creating categories. We're creating markets that on some level don't exist. I am a big advocate of going after blockchain technologies and key enablers in the insurance side, whether it's property and casualty, life, health, whether it's claims, policy administration, identity management, and then there's the securities elements as well. Banking has its place, especially when it comes to tracking assets and the loan process and collateralization. Payments, I'd spend a little more time studying before I decree whether it's the right time and place just to do that again.
Well, great. Well, in the last minute or two we have in this interview, what else should we cover that we haven't?
Maybe just a little bit more about Lightbank. We are headquartered here in Chicago. We're in the center of 1.8 million square feet in northwest side of downtown Chicago. 80% of this building is taken up by a Lightbank related company. We've been investing successfully in the Midwest since 2010. We're really happy and excited to see other firms come to town and understand and appreciate the quality of entrepreneurs here, the quality of the workforce, the great access to capital, as well as to the actual clients for these large enterprise sales that are here, as well as the great partnerships that are here. So I think it's important for people to understand the opportunity that's here, that Chicago and the Midwest is a great place to start a business, and we appreciate all the new entrants and new attention that the area is getting.
Great. So what's the best way for the audience to get back in touch with you? Website, LinkedIn, or what works for you?
I'm on LinkedIn pretty regularly. You can catch me on Twitter at Victor Pascucci 3, and then my email's out there as well, Vic@Lightbank.
Well, great. Well, I appreciate your taking time. Hope to have you come back and we can have a follow-up discussion about some of these things that we talked about, including fintech, blockchain, and so forth. But thanks so much for taking time today.
Look forward to it. Thanks. This was great. Have a good day.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.